All right, ladies and gentlemen, welcome back. It is Thursday, April 18th, and we got another chart talk coming at you. 126 here on the West Coast. That means it's 426 backed by Bennett on the East Coast. How you doing over there, Bennett?
I'm doing good, my friend. No complaints.
I like that double-breasted we were talking about before the market. Look at that, classy. Brings class into this broadcast right now.
Have to.
And before I shout it out, I'm rocking, PSG for my man Heaven. Happy birthday, Hevo. I got him like this jumpsuit from Nike, and it was so fire. I bought it for myself too. I was like, I can't let him have that, not me have it. So, brothers.
I was talking to Augustina about sending him the watch, and she texted me yesterday and she's like, "Yeah, I got it. It's a tracksuit." I'm like, "What? We didn't send him a tracksuit." And I guess you sent him the tracksuit, but I guess. So I was like, we did.
I ordered that before we spoke. I was like, all right.
That's funny. All right, well, there you go.
We got a little bit of a disaster happening in the market. Let's get into some charts. How about that? All right, sharing the screen. So, man, oh man, did they hit this market with the traps left and right to break this uptrend? Let me briefly go over. I'll go over day by day how they did it, which is pretty dirty. All right, so this is our day to take notice right here. Obviously, when we're going in, we were wondering if we were going to stay in this channel or not. We open high. I forget what it was. Maybe it was CPI or something. Open high, close. The entire day we sell off, high volume. That gives us a day to take notice. We go sideways, and this is why they made it so dirty. This day right here. Where, it looks like this trend is bending. We have bad news. We open lower. It was kind of a screw bar on this day. We opened towards these lows. I'm shorting the hell out of this market at this point, getting as short as I physically can for the trend break, which is kind of the move we're seeing now. Here's what they did. So then the next day, they did a fake out move, held those lows and ripped everything higher. And so this has been my bread and butter, this entire uptrend. It really started here. This is January 5th. First pullback of the year, and that's when SMCI set up. That's when all the names started setting up really well. I remember going through charts and being like, hey, charts look really great under the hood. I don't think we're ready to pull back yet. Came on, threw a lot of risk on, and that's what I was kind of doing on pullbacks this whole thing. So I'm getting short this day. I think it was the chart, and we had a chart talk after it. And so we'll zoom into this day. They pop us up, and I'm like, oh, shoot. This was all a fake out move. They're going to rip this thing higher because the semis look so good. I'll explain that in a bit. Where semis, this is the day the market topped, and the semis been leading in. This is the SMH, the semiconductor.
Mm-hmm.
So if you look at it on the SPY, it's this day. But if you look at it on the Qs, it's a really, really big day to take notice. We take out highs here, and we close lower all day. And then since then, it's just been distribution, just sideways action, full of traps. It looks like we're trading in wide range, but we're really going sideways. So then when they do this right here, that day right here, the one I'm talking about, and the semis at that time were setting up like this. I got, all the semis looked so good. They all look like they were coming out of this big pattern. Anyone you type up, this CLAC, KLAC. And this has been, my bread and butter setup where, we get that pullback, names start to wedge at support, CLAC, AMAT at this time. Look how good these charts look. They're all setting up like a ripper. At this time, SMCI had the downtrend break right here. NVIDIA, they were the first ones to move higher. And then what happens in the market the next day? They trap the shit out of it. It was on the Israel-Iran news, and I was like, man, I was so mad because I got super long. And I'm like, God, if that news doesn't happen, we're at, the Qs are at 450. We're at breaking all-time highs, blah, blah, blah. Doesn't matter what happened. The market wasn't wrong. I was wrong. That's the tough part you have to come to grips with trading. So, I was sitting there like, man, if this Israel-Iran attack doesn't happen, we're at highs. I'm making X, Y, Z. It was a trap. They trapped the market, and then here's the action since. That was the short move I was looking for. They had to have one more trap to get the obvious short play out of there. And, hey, they trapped me. They got me. So, that's what you got to come to terms with trading. It's like the market's not wrong. I was wrong. It sucks. It
Mhm.
sucked. I
Yeah.
was hyped. Um, but and then since then, we've had very, very difficult action. Now, once this trend breaks, market completely changes. Market completely changes. The things that made the market go up before were not making the market go up. And here's a perfect example. These ASML earnings, this is a huge, huge semiconductor. Semis have been leading the market, so they're my gauge of risk on and risk off. So I'm going to keep talking about semis for a little bit. ASML, they had these earnings. They come out and they was like, they didn't completely hit on earnings, but um, they're looking forward to the end of the year. They think sales are going to pick back up. And this whole time, what have I been saying is about this AI trade, the semi trade, is they need the constant catalyst. They need the constant catalyst. So
Mhm.
when this happens, I need to flip a switch and be like, oh shit, market just changed hard, And then they sell this, the rest of the semis get dumped, market gets dumped, and it all was predicated off that catalyst changing. And then we had TSM, Taiwan Semiconductor earnings, they apparently beat on top line, bottom line. They're gapping down on that number. Everything's changing in front of our eyes. Things that were positive catalysts before are now acting as negative catalysts. So these semis needed huge earnings to keep this trend going, where they're focused on the future growth and XYZ, and they didn't get. So now we're in this very difficult phase of the market where it's just very, very simple to do less. I was trying to play for a bounce this day. I was getting along some good names, and we opened up higher. I was pretty confident that we would bounce to at least this 510 before we sold off. We sold off right away. I'm looking at that setup. I'm like, if I got that bounce at 510, it would have been great setup. Didn't get that bounce. It's like you have to be a surgeon in this market to really, really capitalize compared to, in this phase, you're buying any bull flag and, everyone's competing to have the highest P&L. That's when you want to push the risk. This time, and it's really, really hard because we love trading so much. We love the action. It's really hard to successfully navigate these because you have to be so quick in your executions. And like today, for example, we bounced, and here's the 5-day moving average. This is like the pure momentum moving average. When it's working to the upside, it's amazing, and stocks are ripping. And now we bounce, we can't even bounce higher than the 5-day moving average before stocks sell off again. So that's my spiel for the big market. I'll hand it back over to you if you have any big takes. But
Yeah.
right now, my big message is, do less, wait for the market. You don't have to be a hero. You don't got it. There you go. There you go.
Yeah.
There
So I
you
think so.
go.
Even last weekend, or no, last week, we were talking, or you were talking about, the CPI reading and how it was kind of giving us like some clues of why the market should pull back. And since then, it's pretty much that's exactly what's happened. But
But
yeah,
they're doing that last trap for me. They're doing that
yeah,
last trap.
yeah. It's that, I mean, but again, we've seen this. I had this 4 stages up here, and this is again, if we, this is a very, I'm not going to pull the book out, but what was it? I can't think of the guy's name, but again, it's very popular.
Ooh,
Is it Weinstein?
Stan Weinstein.
Yeah.
Great head.
Yeah. So it's one of these books back here. He talks about the 4 stages. We also have a quick lesson in getting started. First book on the 4 stages. You have stage one, you have the basing stage. Stage two is the breakout stage, what the market was in. This is the breakout stage for the last few months. You have a distribution, as you were referring earlier, or a topping stage, which we saw the last few months. Again, these stages do overlap. It's not like they work perfectly in tandem, but you can see where these stages start to overlap. And then you have the breakdown stage, and that's what the currently what the market's in, and we're seeing that very clearly in basically every major sector, every major market. We're seeing these broad breakout stages turning into topping stages and then turning into breakdown stages. So, like you said, and this is also something I think we've had, what's it been 4 or 5 months now of I don't say a very easy breakout market, but it's just been a market that just has grinded higher. We haven't had any big down days. We haven't had
A
any.
breakout market. You could say
Yeah,
that. It's just been
it's been a very, but the problem with that is that we get so accustomed to that action,
right.
and it's hard
Yeah.
to reset that risk tolerance of things are different now. And it takes, a few weeks or, a month or so to get grips with, okay, now we're looking for more support buybacks. We need to let, things really shake out. We're not trying to, really try to chase those prior pivots because those pivot loads are getting kind of smoked. And we're just seeing that across the board in all these major sectors. So like you mentioned, less is more, for a lot of the guys, and even for yourself, you had a phenomenal first quarter. It's like the less we could do now, the more, things that I try to do, especially since I'm not as active. I'm more of like the turtle of a trader where I'm a little more patient and I trade much less active than, like what you do. When things get difficult, if there's other things that you can do outside of the market, those are things that I tend to focus on to take my like focus away from the market. So for right now, for myself personally, it's like tax stuff. If I can do tax, help clients with their taxes right now, that's all I want to do. Because if stocks are just breaking down, and I'm typically a long only trader, I don't want to step in front of these names and get smoked for no unnecessary reason, where I don't burn out my mental capital in a sense because I can
And
take that.
physical capital.
Or yeah. So you get, I'm not getting burnt out where, I need to take a break or I need to quit from trading. It's just, I can easily, step away from looking at the charts every single day, focus on something else. And then once, I start to scan my watches and start to find 5 or 10 opportunities where right now, if I can find one, it's like a needle in a haystack. It's just giving us those signs of, just to do, to do less. So again, even like, you know, the only thing I can really like right now is this T-Mobile. But again, it's got earnings next week. Um, I had like a dump money error where I misread this yesterday and I thought they were reporting today. So I got out of it. Like, I bought like 161 earlier last week. And then I thought earnings was today. And I was like, oh shit, let me get out of this thing. I'm not holding this thing in the earnings. And then I looked at it this morning. I'm like, shoot, it's actually next week. So that was just a mental error of just, trying to be more defensive. Um, but yeah, that's again, I'm with you on the kind of the less is more right now. I don't know if you have any top ideas that you want to go over. I can send it back to you if you have anything.
Just yeah, so no.
All right, give me 1 second.
I'll talk about a few cautious signs for the market. So I mean, we're in the GCT. It seems like a few people are in with me. We had a really nice entry, and I was playing for that bounce, whatever I was talking about 2 or 3 days ago. So I was kind of looking for longs, things that were holding up really well, and we ended up buying this one. So I noticed, it just couldn't really falter. We ended up buying it. We put up these new highs. My price is like 32.50. I added some, so my price is now like 33.50. But it made these new lows, and we were just buying this one against these low of day. Things been doing so well. Their fundamentals, their financials are incredible. They're 94% growing their revenue year over year. They traded a PE of like 14 or some shit. It's like a very attractive fundamental stock. And then the price action, which is what I care more about, is dictating that as well. So keeping on a tightrope for anyone in there with me. I'm moving my stop up to like for like at least half, maybe 3/4, down to this like 33.49. I just, I'm just keeping everything tight right now. I was trying to be super active and a couple days ago and stuff, and I felt and it was like another trap where we didn't bounce yesterday, we just sold it. And I'm like, what am I doing? I'm thinking about all these setups. What I think about is like when at night when the chat is just like pumping and everyone's just putting up charts and you don't even know what to buy tomorrow because there's so many setups and I have to rank my favorite setups out of 15 names versus like maybe this one stock could bounce, maybe this
Mhm.
one, and then I think about what I risked on my best trades and then what I'm potentially losing in these garbage setups. And it's like,
Mhm.
man, no. And where I got that lesson from was it last year? I was like, this run. I did really well with this run in my account, and then I just didn't stop, and I traded this whole, and I was so worn out. I was so worn out. I did well at the end of the year, a nice little pop in the account. But if I had this year over again, I would treat it completely different. But it took me learning the lesson of that year, blah, blah, blah. But we don't know what's gonna happen here. This is
Yeah.
what happened the last time we had one of these big channels break. They go further. There's a lot of fake out moves. What I was doing is I was looking at the dailies of these, and it's like the daily candle. It's like, look at here, open lower, we pop, close lower, look like we're gonna die, open lower, pop for 2 days. It's just like what you should be expecting in this environment is just traps.
Mhm.
Just traps to fake out retail traders for liquidity grabs. It's like what a liquidity grab is what's a good example is I mean that day I got faked out on. This before they dumped it, this whole move in the market where it's like the high volume up move, that's just to suck buyers in so that when they dump it, I got to sell too. And it creates momentum to the downside. And then they get their move like this. So if you look on any time frame, you look on a 5 minute, you look on a 30 minute, you look on an hour, there's just traps galore where it's, a lot of people thought we were bouncing today. This little capitulation right here. Here's a 15-minute chart. So a lot of guys getting long. I think Higgins sold the top. Shouts to him. But it's like, look at this high volume move into this 504 area. Boom, immediately erased. Just very, very, very difficult action on the daily charts. I'm talking about different time frames where it's like we take out that low, we bounce, can't even break the 5-day moving average. Boom, we start selling again. So it's just been a very difficult environment. Definitely want to do less. The 10 years just continues to pump higher. Hate that. The one thing I like is it looks like oil could be breaking a serious trend to the downside. We'll see. We'll see if this that Iran Israel news was more of a top signal than anything else. I didn't check on the dollar today. How's that doing? Dollar's raging. Yeah, definitely do less. I'm not really. I don't want to overly go at charts or whatever. When strength does come back to this market, I think it's going to be the boring mega cap tech stocks. Meta, Google, Amazon. These guys are just sitting on a ton of cash. They're investing in all the best AI. You think Google's not going to be a top competitor in the AI field? They have $100 billion to throw at it. So I think strength goes back to those names. Not the most fun to trade, but that's just my take on it. But also, who knows when that is? Maybe we bounce tomorrow. Maybe we don't bounce for a week. All the stats, and that's really all I got from a chart aspect. The stats are so funny now because it's like we've been in this crazy uptrend since the end of October. October 30th was the low. October 27th, 30th was the low right there. Then November on. So now every stat you see, it's like we're one standard deviation below the 50-day right now. The last time we were at that was October 30th at the market lows. But that's a convoluted stat because of that run we went on. We didn't have a 2% pullback for 5 months. So now that we're having that pullback, it's not like I don't think it's all going to turn around like that. And so what I'm looking for is constructive action. I don't think we'll have a V bottom or however we want to do it. If we pull back to 490, if the pullback stops here, I think there'll have to be constructive action, and we'll have to start seeing these these moving averages that are curling down. We'll have to see them taken out first, and that's our first semblance of okay, maybe they're working on a bottom here, but overall, we can see how much more difficult the action is lately. I was looking, and they just I don't have my screen up. I'm talking about charts and I don't have the screen up. I just saw Netflix beat earnings, top and bottom line. They're selling off after hours. Market could be changing right in front of us. They're taking good news and selling it. Until we see that change, at least it's gonna be a little tricky out there.
Yeah, we were talking about privately the other day about the book Pitbull, and I feel like something to help members stop forcing to do things is not off the open. It's not like we're really rushing to things off the open, but now that the market is shifting, it's like trying to replace, what we're used to doing in what was that breakout market, not shifting. It's like you mentioned the book Pitbull. It's like we should almost, just like for the first hour of the day, it's like, all right, just read a book, post the best page to divert us away.
The thing is, for traders who are trying to actively trade, it's really good for you to sit in front of the computer and just sit on your hands. Just sit on your hands, watch the action, and don't do shit. Because then when you start watching the action, you're so conditioned to be trading every time you're sitting there. I fall into that where I want to be doing 100% of my research throughout the day, so I don't really have to at night. I do a ton of research at night because I'm always trading, because I'm always watching 5 minute 15 on something. So now it's like it's nice to just sit on my hands and just watch the action and know that there's dog poop action out there, but you just watch it and you get better and and then you realize, oh, something's changing. Might be time to load up. Might be time to whatever. But just sitting there watching the action, I think is super productive. Someone like you who's more long term, yeah.
It's just hard. It's like I think back like the prop days. It's like it's like we were forced.
That's different. That was hell. You were fucking forced to trade.
But I'm saying in that example, it's like it's very.
You didn't take that trade.
It's like you don't want to trade it.
You take that trade. Yo.
So it's hard.
Then you take the trade, you lose $700. You're locked out, and you want to fucking kill yourself. It's like, oh, sick. Love this job. Love it.
Yeah, so that's like the reality of like, yeah, that's the other side of it. So last week we were talking about when the Qs look like they were going to test new highs. We were having that question for AI now, just in the short term, sure, purely price action, not what they're going to do in 5 years or 10 years. Do you think the top is in for a lot of these AI
AI
names
stuff.
like SMCI, Nvidia? Do you think the 52-week highs are in for the year?
I mean, they each have earnings up coming up in the next week. I personally don't because I think they have a good report and they're just going to rip it again. It all depends on the earnings. I personally don't,
Mm,
but I'm an optimist there. If they did, probably we'll look back and be like, oh, it made a lot of sense. But here's the thing: is that if you look at Nvidia's stuff, it's just they're already pre-sold out of a lot of their stuff. So it's like
mm,
a lot of their earnings are set in stone. So they're gonna have these huge numbers and they have huge expectations. So if they can top the huge expectations again, there's no
mm,
reason for these stocks to not continue to keep running. Nvidia, they talk about the valuation. If you look at a forward PE of its future earnings and stuff, they're only trading like a 30-27 PE, which
mm.
isn't ridiculous. And to give anyone context, it's like Yahoo at the top of the internet bubble traded at a 600 forward PE. So, if you're really into straight numbers, it's not that crazy for them to make new highs on a great report, which I think they will personally.
Yeah, no, I like that. I like that. I'm with you on that a lot. All right, I think we covered everything we got for today.
All right, all right. Nice little chart talk. Final message. Now's the time to do less. It's good to sit on your hands. If you want to go read a book, be a little bitch and read a book. If you want to sit here and watch the action like a man, so you know when it's time to put the wrist back on. You know where I'll be. You know where I'll be.
Okay, Marty.
Let's
All
wrap
right,
this thing
that's
up.
it. That's it.
Like, comment, subscribe, all that good stuff that no one does, and I say every week.
Yeah.
Questions, throw them at Bennett, and we'll ask him, we'll answer them however
We'll,
we get to a third chart talk.
we'll
But
get our
otherwise, see you guys next week.
we'll get our one comment.
Yeah.